This is the ES2 Renko on 2/13/2012. I looked at the FOR Renko for about a half an hour from about 6:30 when the market opens here in California till 7, and it wasn't doing much, so I switched over to the 2 Renko. And after this squeeze came in here, I went short right here as the swing cycle moved down through the variable band. You can see right here that it was relatively oversold. Right here, went up here, got rid of some of this degree or amount of oversoldness, if I could coin a word here, and then started back down again. So I went short here, and you can see it's obvious all the indicators were indicating that it was a down move. Now I got out of this down move here for 2 points. Now why did I get out of it here? Well, I've come to rely more and more on the RWO, and I noticed right here, and this is another reason, by the way, that I like to look at the whole chart. I don't like to put a couple charts on the screen and just look at a few minutes of each chart, because I can usually get some information by looking at a longer time period of the chart. So right here I saw that the RWO went down here and then moved back up, and this down move stopped right in here. Same over here, it went down here and the down move stopped right in here. Here it's down to actually the same level or slightly below, and so that's why I got out of this, because I felt that the RWO, as it had done last couple times it got down to this level, would start up again. So this was the first trade of the day. Now here's the second trade of the morning, and I was engaging in what I call sparrow trading today, just taking little bites out of the market each time, and you can see it was a conservative idea to get out of this trade, as it did go up a little bit here, and then this was a failed upcycle right here when it just got right up to the variable band, and there was a squeeze right in here. Then the swing cycle turned red and was moving down, so I got in this trade right here as everything was clearly moving down. Now if you look at it in hindsight, you say, well, you should have stayed in this short trade here, not got out and then got back in, because you just added up the transaction costs. And obviously using the DMI differential, it stayed well below its zero line, which indicated it was not going to be an up move here. But in little sparrow trades like this, where I don't have a lot of profit to play with, I tend to get very conservative, because I hate to give money back once it shows up on the chart. So I tend to just take my profits off the table as soon as I can. So in any event, that's what I did here when the bar was right in this area, and then I went short here and got a little apprehensive here when the swing cycle moved up here, but I realized how far below the zero line the DMI differential was right here, so I stuck with the trade. And now I got out of it here as the swing cycle was moving up again above its variable band, and it turned green here. Also the DIX was moving up here. Now I've found that the RWO is a very good divergence indicator, and you can see here between here and here, those were a lower low, and the RWO went a little bit below that. So there was no divergence at all here. However, coming down to here, and the RWO didn't come down to this level this time. It stayed up right in here. So I felt fairly sure that there was going to be a retracement in this long downtrend that had come down through here. So I took a 1 point profit on this trade and got out of it right here. All right, now here's my last trade of the morning, and as I mentioned, I felt there was going to be an up move here because of the divergence in the RWO indicator, and you can see its low is there, and on this bar, which was really higher, it had come down even lower. So obvious divergence. So what I did was I put the Fibonacci retracement lines in here from the this triangle right here down to the lowest of the low of the bars right here. And what I did was I put a sell stop at the 61.8 level right in here. So when the equity got up to that level and triggered the stop, then I got out of it right up in here. And also there was resistance from Friday's close right in here, so it was getting pretty close to that. So all in all, and in keeping with my sparrow mentality today, I usually don't do this, set a sell stop in advance, but I did right here. And so this was a couple points trade in here. So today was a total of 5 points on these 3 little trades that I made. And the other thing I want to point out to you is that how good the Bollinger Band Differential Oscillator is, because if you follow these videos, you know I've said before that the when the Bollinger Band Differential Oscillator is below 0, that means it's a downtrend. When it's above 0, it means it's an uptrend. And between 50 and 61.8 right in here, that's the ambush zone, and if it's just a retracement, it's going to stall out at this area in here. And you can see right at the 61.8 level is just where the Bollinger Band Differential Oscillator stalled out right here. Now, the time I'm making this, I'm not sure where else the market went after this, but this was not a bad morning, and for 5 points. And I think you have to work a little bit harder when you're trading 2 Renko, but if the 4 Renko just isn't going anywhere, the 2 Renko is a nice fallback position to take.